Crypto markets consolidate after the weekend of pain. BTC fails to bounce convincingly after heavy Asian selling flows take us back to the key 200-day moving average support. Ethereum comes back to earth as crypto weakness persists ahead of a pivotal FOMC meeting. All this and more in this week's Crypto Insight. So what's going on in crypto this week? We saw obviously the big liquidation and breakdown over last weekend. That flushed out quite a lot of, weaker hands, shorter term holders and things like that. We've been consolidating this week, but, the truth is that type of sell-off is very rarely, the end of the move. And I'm kind of now going on the assumption or the scenario that we are carving out a larger degree correction in Bitcoin, which could see us, ultimately bottom out somewhere in that 30 to 40K area. I do think the hawkish pivot out of the Fed matters to Bitcoin. So I think, it will come off with other risk assets if other risk assets come off on the back of that. So I do think that is a scenario we need to be aware of. The 200-day moving average is kind of under attack right now. So if that does get a proper, conclusive break, then that could lead to an acceleration back down to these lows. 42 to 40K is the first region of support. But if 40K breaks, then that opens up a bit of a void, I'd say, down towards 30K, which could really lead to some serious volatility, right? So I think that scenario is very much, certainly the test of 40K is my base case at the moment. Whether we can actually break that and get to 30K remains to be seen, but I wouldn't be overly surprised, to be honest. Yeah, that would trigger a serious flush out. Okay, so that's where I am thinking in terms of the technicals on Bitcoin itself. If we then look over at Ethereum, it's kind of broken down as well. This is quite a big level at 36.5 that it's bounced off on the first test. The next one would be the 200-day down towards 3,200 if that broke. That's kind of consistent with a break. If Bitcoin goes down towards, that 42 area, then, don't see why this ETH doesn't go down towards 32, right? They're kind of consistent with each other. The other thing to look at, obviously, is this chart here, which is the cross, where, it had broken out above the key level at 0.08. It had managed to touch, close to 0.09 even in the face of Bitcoin crashing. But now we're retesting that breakout zone, okay? So usually this cross has got some beta to the crypto market in general. ETH had been very resilient in the face of Bitcoin weakness, but I suspect that if crypto does sell off and we break this key 200-day moving average on Bitcoin, then the whole space sells off and then this spread probably reverts back towards some sort of average level below 0.08, basically. Wouldn't surprise me. Yeah, so that's kind of what we're thinking on Ethereum. On-chain metrics this week. Interesting chart was, unlike the summer sell-off, where we had a lot of exchange inflows, okay? So if you look at inflows, there was a lot of exchange inflows as the market was selling off in May, where people put onto the exchange so they can liquidate and get out of their exposure, okay? And it's basically people holding with a more short-termist kind of view, right? They're just going to leave it on exchange. Now, what we're seeing in the latest sell-off, October to December, is actually outflows from the exchanges. Okay, so that tends to mean the people who are basically buying the stuff on the way down, they don't want to hold it on exchange. They want to park it in off exchange, cold storage, that type of stuff. Okay, so that's usually quite bullish because it means it's going into stronger hands who are going to hodl it for longer. Okay, so that's quite an interesting dynamic for a longer term bullish perspective. That doesn't really tell us much about what's going to happen in the short term. Now, I do think that as more investors enter the space and understand the benefits of self-custodying their coins and things like that, it makes sense that you're going to see more exchange outflows anyway, basically, right? So that's one thing to bear in mind in terms of the data that you're seeing. Institutions who plan to buy early next year, Raoul Pal keeps saying that instos aren't going to be buying now. they're going to wait till next year. They've been spending the whole year getting approvals and going through all the red tape to get into this stuff, to allocate however much they're going to allocate, and they're going to do that in Q1. That's his view. If instos pile in and do that in Q1, are they going to park their coins on exchange, or are they going to park it off exchange? I suspect they're going to custody a lot of it on exchange with like the likes of Coinbase Pro and things like that. So we may see a reverse in this kind of what we're seeing with the outflows and inflows, something to keep an eye on, but that's just going to muddy that data even more if we start to see that. Okay. But for now, seeing that contrast between the summer sell-off and this sell-off, you're less concerned for the longer term, basically, right? Seeing that, that's probably all you can read into that. In terms of levels, futures open interest obviously collapsed. We said that already. That stayed at the lower level. It hasn't really recovered much. Perpetual futures funding rates have also recovered, but they're not anywhere near extremes. So suggesting that, no excess leverage really in the futures market right now. So that's a good thing. But like I said, I don't think it's going to be an idiosyncratic crypto-led sell-off. If it comes, it's going to be a macro-led sell-off due to the Fed's hawkish, the dollar's rallying. Oh shit, get me out of everything, basically, right? That's going to be the type of thing that drives us lower if we go lower. One thing I did find quite interesting is, though, at the same time we're approaching the 200-day moving average, which is obviously a level that a lot of people care about. We also have this indicator that Glassnode flag, which is called the net unrealized profit and loss. And this often kind of gives you inflection points where the market kind of has to hold here and support, or if it breaks, then it's a bit of a shit show. Okay. And it seems like we happen to be at that level as well, where the unrealized profits and losses are at this key level, which in the past has been a level that's been defended in a bullish trend where it's marked a low, or in a bearish trend, it's basically broken that level and we've seen that collapse, basically, right? So the fact that we're seeing that in the kind of P&L of participants of the market, and we're at quite an inflection point in the P&L at the same time we're at an inflection point in the technicals at a 200-day moving average, is quite interesting to me. So it kind of adds to the significance of this level right now that we're at in crypto. And also, basically, to me, it means that we should probably expect some volatility. We're either going to bounce hard off this level, or we're going to break it. And again, like I said last week, all hell's going to break loose, but we've got the lower levels to look forward to, basically, right? I mean, if we're going to test 40K again and see if we can hold that. Let's move over to the vol analysis. So if you look at the volatility cone, just to get an idea on realized, you can see that, the current realized is the blue, and that's kind of drifting back down. So whereas that was above like the 75th percentile on the shorter dated part of the metrics, it's kind of drifting back down a bit, right? So makes sense. Market kind of had its move, stabilized, consolidating. So realized comes off a little bit. Okay, nothing should really surprise you there. Typically, when we see that, what do we see in term structure? Same kind of story. We see term structure steepening. So this is from like 5 days ago. You can see the whole curve kind of shifting down, but that front end moving the most, right? We got the front end into the 60s. When I say the front end, I mean this week expiry. Okay, but given that we're at this major inflection point of the 200-day, and in terms of people's P&Ls, there's some liquidation risk. I would argue that a sub 70 vol for this week with the FOMC catalyst is probably a little bit cheap. Right. So, opportunistically owning some gamma in Bitcoin to play that catalyst on Wednesday, I don't think it's a bad shout. Okay. Skew, if we want to look at the skew, we can see in Bitcoin, all the skews are sub-zero, which basically puts over. And that's no surprise. People have been wanting protection, needing protection. You do get these little bouts of the pink line jumping, which is where it flips back towards calls or more neutral as people pile into short-dated calls. So we definitely did see that sort of heading into the weekend as people thought, okay, Bitcoin's popping its head back above 50K, game on, we're going to rally, and they just pile into short-dated calls to play that. but that's kind of faded back down again as we failed and we've retested that 200-day, and we see the short dated puts are like back to 3 or 4 vols over, and even the longer end is slightly favoring puts. Yeah, that's what we're seeing there. In Ethereum, we kind of also see the same thing, and interestingly, in Ethereum, you actually see puts even more expensive. So, you know, puts are kind of as wide as sort of 6-7 vols over, and that might seem surprising at first because, well, Ethereum's been outperforming. So why are puts so well bid? And that's because people own Ethereum. It's been outperforming. They've been buying it. They've been chasing that breakout in the spread, and because they own it, that's why they need the protection. So often you find markets that are more well owned by speculative positioning actually have a higher put skew because there's more reason to own the protection as well because you're so long it, right? So that don't think that the skew is saying that people are super bearish in Ethereum. It's often the contrary, that they own it and therefore they need the protection. That's how professional money managers tend to operate. When they go very, very long an asset, if they can buy protection on that, they will, basically, right? And that's kind of how it works. So that's what we're seeing in Ethereum skew relative to Bitcoin skew. If we look at kind of what flows have been going up on the blocks, we're seeing, again, kind of calls dominating the action, right? So you can see in Bitcoin, you know, the 60K calls in December have been going up. So very short dated stuff generally. So people focusing on like December 60Ks and maybe some January 70Ks as well. And then in Ethereum, we've had some flows in December 5100s, right? Those are, so generally people kind of using short dated options to buy the dip when their conviction is maybe not so high and they see that the risk of it continuing the sell-off is there, then they just want to just commit a little bit of premium to maybe try and pick up the dip like that. The thing that I noticed outside of the blocks though, which was quite interesting, was that, you know, and these are some really nice charts that GVol have, is where you can see the biggest change in open interest over the week. And you can see here for Ethereum, you know, we've got the January 60 calls, right? So we had the Dec 51 calls, but we had the January 60 calls in about 10,000 contracts, 10,000 options. And that didn't really appear, that didn't flag in the paradigm stuff, in the blocks. So this is more smaller market participants trading directly on Deribit. Okay, so you'll see non-block flow coming in, potentially buying those January 60 calls, right? And the reason I think it's buying flow is because if you look at what the skew's done in January, you can see here, whereas, you know, the at the money stuff has drifted off in vol terms, which is the pink line lower than the blue line in the at the money strikes. If we look up at those strikes in 6K and above, they've all gone up in implied volatility, right? So you're seeing, as we're trading down, volatility is coming down because realized isn't really that high, but that upside call wing is going bid as people are buying call options in December and January to have some exposure to the bounce, basically, right? And we can see that in the moves in the smile. We can see that in the changes in open interest that we're seeing in the market, basically. Right? So it gives us a good way of kind of homing in on where the flows are and what the options market is thinking and what they're doing, basically, right? In terms of me, what I've been doing with my positioning, you guys will know, you know, I cut a lot of my exposure in crypto. I hedged out my Bitcoin with some short dated puts and some put ratios in Jan. I also sold some futures on Ethereum against my holdings. So I'm kind of, that's where I'm at still. I'm feeling in a pretty good spot. If crypto's got another 20-30% downside, I don't really care. It'll put me in a nice place where I can really add risk if I feel like the correction's done. Right now, I don't think the correction's done, so I'm not doing anything there. One thing I may do if the market comes off and volatility really spikes hard, particularly on things like Ethereum, I might keep my short futures position that I've got on, and I might just underwrite some puts against it as a way of selling that stupidly expensive vol if it gets there. But I'm talking about 150 vol plus type levels that I'd want to see in Ethereum vol before I start launching any puts. For now, I'm pretty comfortable just sitting on some short futures against my equity. Yeah. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.